Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, August 26th at the market's close. Well, in a speech kicking off the Jackson Hole Central Banking Conference in Wyoming today, Fed Chief Powell said the Fed will raise rates as high as needed to restrict growth and would keep them there for some time to bring down inflation that is running at more than three times, the Fed's 2% goal. Now, as you probably know by now, that speech sent the market much lower today. So let's go and take a look. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the ETF that closely follows our benchmark S&P 500 index. Now, the SPY closed today at $405.31. That is about 15% below the SPY's last all-time closing high. Actually, you can't see it here, back in January at $477.71. Now that we know that the SPY generally fell, except for that little perk up in March there, it pretty much fell all year long so far, down to its June low at 362. Then it managed to rally up here to poke above the 20-day moving average, the red line, fell back down, but made a higher low here at 371. So we said, all right, well, that's always a good thing. Higher lows are a good thing. Buyers are holding it up. Then it managed to climb back above the 50-day moving average, the green line, and managed to move all the way up here to the 200-day moving average at $431. And we said right then, if the SPY cannot get above the 200-day moving average, and this was a help to us because people obviously who don't know how to read charts or know what the moving averages mean wouldn't have the advantage we had. But we said, all right, it's up to the 200-day moving average, which can be a very strong dude when it wants to be, especially when it's moving lower. So it hit that resistance, then dropped back down to the lows here, right about where it had been trading earlier in July, maybe a little tiny bit higher, dropped down to 411. And I said yesterday on Twitter, if the SPY can't hold 411, then we'll probably take a move lower. Well, that happened today. It's because during July and August, and let's look here, July and August, that nice uptrend, during July and August, Wall Street had decided that the Fed was done raising rates. Just so, the market moved higher. Well, the Fed's done raising rates, we'll buy, right? Well, this morning, Powell, who is obviously a little annoyed with the market, in effect told the market that the Fed was not going to stop raising rates anytime soon. So what happened? So the market, of course, the sellers came in and said, heck, we're out of here if the Fed isn't going to stop raising rates. And what we have here is, if you know patterns, you know we have a small but certainly decided head and shoulders, which is a top reversal pattern. The neckline comes, or the support, price support, comes in here at 411. If we take this head and shoulders and we move from the neckline up to the head, the top of the head so-called, then that would put the SPY, if it fulfilled the move that they usually take down, that could take the SPY down to 393. Now, of course, that at the moment, that's below where the 50-day moving average used to be. It's right now, the 50 days coming in at 398. But anyway, it would take it down to this zone down here to about 393. And we see, well, what do you know? That was prior resistance, could now end up being support, but we'll have to see. And so right around 395, 393, that's where we had price support back again in July and further back even in June. So we want to keep an eye on that in the coming weeks. In the coming week, I will also be watching the 50-day moving average where it is right now, of course, at 398, 399, right in there. That could offer some price support if the SPY goes lower, and then we have to look down in this 393 zone. So please know that if the SPY does move below that 50-day moving average and down to 393, or even starts to go down that way, I will become more defensive, and I think a lot more other traders will as well. Excuse me. The next chart we're going to look at is the Invesco QQQ, symbol QQQ. The Qs represent the Nasdaq 100, a major index in the stock market. Top holdings including momentum stocks like Apple, Amazon, Microsoft, Tesla. Excuse me. Now that got hit hard today because momentum stocks, tech stocks, dislike interest rate hikes very much. They do not like high interest rates, these stocks. So today when I captured this chart, at the close, the QQQ closed at $307.44. Now it's managed to stay above the 50-day moving average so far. It is today trading at 26 below its all-time closing high, which was way back in November 19th at 403. So we know that after that, the market fell, the QQQ fell, bounced back up in March, then came all the way down. Everybody had June lows. Everybody had them. Fell down to about $269, then rallied back up to $294, fell back down to $276. That was a higher low. We say, oh, well, good. That's a good thing, and it usually is. And then it rallied to 330. Rallied to 334 on August 16th, right here. Now that was the QQQs could not make it all the way back up to their 200-day moving average. Note that. So the Qs were actually weaker than the SPY. The momentum stocks were weaker than the broad market. So it couldn't make it all the way back up. Got to 334, said I'm done, and started falling back down. Fell back down below its 20-day moving average. So like the SPY, we have here a small head and shoulders. There's the left shoulder, the head, the right shoulder, and we said that if the Qs fall below this 313 level where it came down to earlier this week, then bounced back up for a couple of days, and then today, of course, it all happened, and it closed lower again at 307.44. Now, like the SPY, there is a 50-day rising here, a moving average rising, the 50-day moving average rising and coming in right now at $303.52, 303.52. So that's potential support here. If the QQQ actually comes down and fulfills its target, which would be the exact measurement of that, it will come down to about 291, 290. We can start looking for support there. I don't like it. It's below the 50-day, but at least we have to know where it is. So knowing this, getting into momentum stocks right now, you may want to get a little more defensive and think twice, at least until we see what's going to happen in the coming week. Please do remember that cash is a position, and sometimes the sidelines are the best place to be. Okay, if you insist on being long in the market in the coming week, believe me, the only thing I saw moving higher today were commodities, corn, wheat, soybeans. But I did find, and it's kind of interesting, I did find the Advisor Shares Pure U.S. Cannabis ETF, symbol MSOS. We haven't looked at this before. It does have 10 holdings. Green Thumb, some of the top holdings are Green Thumb, Trulieve, Curaleaf, Verano Holdings, and Cresco Lab. So with the market falling so hard today, again, it's one of the few ETFs I could find that didn't fall, except commodities, I said. So if you really want to be long in this market, I am looking at MSOS. It's kind of interesting. The ETF is only about 2 years old. It made its all-time high in February of 2020, which of course you can't see on this chart, at $55.91. Now, like other cannabis ETFs, it fell pretty hard starting in March of 2021 and finally came down to its all-time low here. And again, it's only a couple years old. Its July low at $10.11. Now, interestingly enough, it has started moving up, making a little bit of a higher low here, and then moving in August, moving up. It tried to get over the 50-day, couldn't do it, came back in, but now the 50-day moving average into August came down, 20-day climbed over it, and this ETF has consolidated right around the 1150 to 12 area here for some time, and in the past 3 days, volume started coming into it. We can see a little bump up. It was probably one of the holdings had an earnings announcement, maybe. So it pushed it up to today's closing price at $13. So if, and it's a great big if the market stops diving so hard in the coming week, and if the MSOS can stay above $12 even, I may, operative word being may, buy a small position of the MSOS, and my initial stop will be a tight stop placed at $11.50, just right under that 50-day moving average. I've told you in the last few weeks I am in no mood to lose money on a market, that's moving down and certainly an ETF that's following. So I'm just going to be careful here. If it looks like it can really get some traction, I may get into it. Again, my initial stop will be a tight stop at $11.50. Now, if and when the MSOS can rise above this prior high here, and this comes in, if I can draw a straight line, at about $14.50. If it can move above and close above $14.50, I will add to my position, and by then I will be using a trailing stop. So you might want to keep an eye on the MSOS, in the coming week. So now, when the market is cranky, it's a great time to turn around and look at yourself and invest in yourself. Take a few minutes to check out my online training programs and see how you can become a better trader. These programs include our flagship training, 7 Steps to Successful Trading, How to Swing Trade Successfully, extremely popular program, How to Trade the Trend to Profits, which is going to come in very handy in the next few weeks, plus How to Read Charts, great for beginners, 3 Winning Setups, also good, Bottom Fishing, which is again going to be exactly what you want to know in the coming weeks. And these programs are timeless, and they can help you increase your gains quickly and easily. And there are more programs beside these. To see all of my online training programs, simply go to the link on this screen, or easier still, just click on the orange button below. Please be careful out there next week. Please, please, please. Sometimes the sidelines are the greatest place to be. So keep green on your screen. Be careful out there. I'm Toni Turner, and this is The Market Now.